we are going to discuss about stock valuation methods in TallyPrime. So before going in depth in the product, so let us first understand about the stock valuation, what exactly it is and why it is required or why the businesses will do the inventory valuation. So what do you mean by closing stock valuation? So first of all, we have to understand what is closing stock, right? So closing stock is nothing but it's an unsold stock available in the business. So when I'm mentioning about stock, right? So the word terminology stock differs from inventory, right? So when I talk about inventory and when I'm referring to stock, both are different concepts. So when I'm referring to inventory, it can be any stock item that is lying in my business. It could be capital goods or it could be finished goods, right? Or it could be raw materials or it could be the materials which I'm using for office consumption. So any stock available in the business, like it could be furniture or fixture or computers used by the office staff, any inventory will be referred as any stock items available in the business will be referred as inventory. But when I'm referring to stock, stock is nothing but about the finished products or the tradable stock available in the business. For example, if you are a manufacturing company, whatever the finished goods you manufacture, that will be your primary item which you will be selling to customer, right? So that will be referred as stock. In case if you are in a trading segment, and in case if you are purchasing multiple items or multiple categories of items and selling those multiple items to the end users, in that scenario, whichever items you are purchasing and selling, that becomes your stock. So as on date, whatever the available stock we are having in our business, which we are yet to make sales, we call that as a closing stock. So basically, it is nothing but our opening stock plus our purchased quantity of that kind of a particular stock item minus our quantity sold, right? So that will be giving the closing stock available in the business. So again, this has been handled inbuilt in the product, right? So whatever such quantity of stock that are available in the business, we have to do the calculation of the valuation of that particular available stock. And the same thing has to be reflected in our financial reports. Financial report in the sense that our trial balance, profit and loss account, and balance sheet. So this process of valuing the closing stock, which is nothing but the stock of tradable stock, or it could be the stock of the items which we are yet to sell. So such process, we call it as closing stock valuation, right? So why businesses do this closing stock valuation? So here are certain points, important points that I have tried to jot down. So the first one is basically to determine the current value of the stock, because unless until we determine the current value of the stock. So you might have purchased that item 2 years back, but as on date, what is the value of that stock, right? So that as on date, whatever is the value of that particular stock, based on that, you will be showing in the financial reports. So for that reason, at least you have to value the closing stock available with you. And also you have to determine the cost of goods sold, right? So whenever you are selling such kind of primary items, you have to determine the cost of goods sold. So this is nothing but the consumption valuation, which again we have handled inbuilt in the product. So when I'm taking you through the product demonstration, I will explain you how this cost of goods sold is arrived. And next one is to know the accurate profits, right? So you will be able to understand the accurate profits when you know the cost of goods sold of that particular product. Again, cost of goods sold is determined based on the existing value of the product. So when you know the existing value of the product and the cost of goods sold, you will be able to arrive the accurate profits. That is at transaction level also, we have given option to derive the profits based on the costing method that you have applied. And also because you are taking up this valuation and you are continuously evaluating what is the current value of the stock available with you, it will help you to have the, it will help you to do various decisions. Like it could be avoiding overstocking, because continuously you are calculating your available stock available with you, right? So it will help you to avoid the overstocking, or whenever there is a shortage, it will help you to place the orders. And also, whenever the additional expenses or the related expenses of these stock is going high, because of the valuation, you will be able to curtail the expenses also. And since we are tracking the quantity here, it will also help the manufacturers to have a proper production planning. When the stock item value is lower, right? Or in case if the raw materials are there and if you're applying this valuation, so whenever the raw material value goes down and the value of the finished good is higher as per the market, right? So what the manufacturer can do, they can produce the excess and they can keep the quantity. So such kind of strategic decisions also they will be able to make whenever they are doing the closing stock valuation. And the fifth point, I'm not sure to what extent it is true in UAE, but in India it applies. So in India, in case if any business would like to take a business loan, right? So even their closing stock statement is required. So the more accurate the Indian businesses calculate their closing stock value, the appropriate stock statement they will be able to produce to the banks or the lenders. So this also exists in certain countries, but currently I'm not sure about UAE if this is also considered as one of the document. So these are some of the primary reasons why business has to do the closing stock valuation. So I would like to pause here. So far, whatever the points that we have discussed, is it giving you a fair idea about stock valuation, why businesses will do and what advantages it will give to them? And again, all these things have to be adhered by each and every business which is dealing in inventory as per the accounting standards. It's not that even though I'm running a business, I cannot say that I will not comply with the valuation, right? So since they have to reflect the values in their financial reports, for each and every business which is dealing with inventory, it is a must for them. Similar to your VAT, like how it is applicable for the businesses, similar to that, the stock valuation is also one of the mandate things for each of the businesses. So now we were talking about closing stock valuation, right? So as per the accounting standard, we have prescribed methods. So each of the businesses, they will adopt one of the method during the financial period. So during the financial period, you cannot apply more than one method to value your closing stock. So you cannot say that for 6 months I'll be applying the weighted average method and for next 6 months I'll apply the LIFO. And for few items I'll apply the average cost and for few items I'll apply the FIFO. So that is again not a acceptable one. So in case if you are applying a particular method to value your closing stock, you have to apply the same across all the stock items that you have created in the product. So now let us understand what are the different stock valuation methods that are available in TallyPrime. So these are some of the stock valuation methods which are available in TallyPrime. Almost all the standard methods which are widely used across different countries are already configured in Tally. So by defaultly, whenever you create a company, the average cost will be configured. This average cost is nothing but a weighted average cost method. Most of the businesses will understand that this is simple average method. So that is not true. So whatever the weighted average cost method, which is most widely used in most of the industries in the universe, is the average cost method that we have given in Tally. So next is first in, first out, last in, first out, LIFO, which we call it as. And next we do have standard cost method. And we do have monthly average cost method. Monthly average is nothing but one of the sub-component of average cost method. And next we do have at zero cost and the last purchase cost. So these are the different methods that we have. But in the universe, most widely prescribed methods are weighted average cost method, FIFO and LIFO. So using these three most methods only, almost 90 to 95% of the businesses across the universe will be valuing their inventory. Okay, so about these three methods, we'll go in depth and we'll learn. So just to share with you, in India, most of the businesses will use either average cost or FIFO only. LIFO is abandoned in India, so it has been lapsed some 3 to 4 years ago itself. But in most of the other countries, it is used. So mostly in US based companies, right? Or the US based companies located in different countries, or most of the companies in US, only they adopt this LIFO method. Otherwise, even in UAE also, we have come across the customers who are most widely using either average cost or FIFO methods. So first we'll look at the average cost, which is nothing but weighted average cost method. So this is the pre-configured formula or inbuilt formula which we have already configured in the application level. So no need for customers to configure. So they just need to select the method in the items. So even though if they are not going to select this method in the items, by defaultly when they create any item, the costing method by defaultly will be set as average cost. So in average cost method, what the system will do is it will keep calculating or recalculating the average cost per unit. Whenever there is a new inward added, it keeps recalculating the average cost per unit, and average cost per unit will be calculated with this formula: total inward value as on date divided by total inward quantity. So based on this method, it will be calculating this average cost per unit. So whatever the average cost per unit the system has calculated here, right? Same thing will be applied to calculate the cost of goods sold in the stock summary report. And based on the cost of goods sold, your closing stock also will be valued at this particular average cost per unit. So as I mentioned that average rate, it keeps recomputing every time whenever there is a new inward, right? So basically the industries with the product rate that is getting fluctuated mostly, right? They prefer this particular method. And the businesses dealing with similar inventory items, like it could be retailers or manufacturers or distributors and wholesalers or food industry, etc., right? So for these kind of industries, this method will be mostly suitable. So now let us see in the product how this method works. So I'll be recording few of the transactions so that you can infer, like for each of the inward transaction or for different vouchers, how this method will be applied. So here what I've done is I've just created the company. Let me just rename this. Creating one of the items so that it will be easier for you guys to understand. I'm just giving the name of the item itself as average cost. Right. So to configure any of the costing methods, in case if the item has the units of measure, then only you'll be able to configure. So item without quantity, obviously it will not fall under the closing stock valuation, right? So units of measure is very much important. So once you select this units of measure, so in case if I have enabled this additional details column, so here you'll be able to get the costing method. So costing method is nothing but the closing stock valuation method here. So here, as I mentioned, by default, this will be average cost. So if you press space bar, you'll be able to get the other methods for configuration. Right. So here also you may get a question from customer that in this financial period, I want to change the costing method across all the items. But currently in Tally, we do not have the option to change at one shot because see, the customers would have maintained different kind of stock items, right? So some of them could be finished items and raw materials. Some of them will be the items which they are using for personal consumption or the office consumption, right? So which they will not include for the closing stock valuation. So considering the different kind of items the customer maintains in the company, we have not given that provision yet in the product to change the costing method at one shot in all the items. That is the reason it is the part of a single item alteration or creation screen. So, but however, our partners have developed add-ons in case if a customer is maintaining only tradable stock and if he wants to change for all the items at one shot, he can use the add-ons. Okay. So if any customer is asking this provision is not there, you can give this particular reason. But however, we have considered that requirement and we are working how best we'll be able to give that provision. So currently here, I'm just selecting average cost. And next you'll be getting the market valuation method, right? So there is one more point as per the accounting standard. So when you are showing the closing stock valuation, either the costing method or the market valuation method, when you compare with these two, whichever value is lower or higher, based on that, the business can also show the inventory value in the financial reports. So currently, again, that particular provision we have not given in the product. So we have given in the product only to show the closing stock valuation considering the prescribed costing methods, right? So this market valuation method, though it is available in the item master, you will be able to only in the stock summary report or other financial reports. That is, when you press Alt C, you can select this market valuation method and see what will be the value of your stock, right? But you will not be able to capture based on these market valuation methods. The closing stock valuation cannot be captured in your financial reports. In case if customer has to do that, he has to do it manually, but not within the software. So is it clear? So some of the customers may also ask this. So this is one of the popular requirements which we are having in India, but now most of the businesses are using only costing method. Market valuation method, it will be mostly used for your equity stock or share in case if the company is of share brokerage like that, they will be mostly using the market valuation methods here. So even for such kind of businesses, only for comparison, we have given these methods, but not to reflect the values based on these methods in the financial reports. So here we have certain 4 methods at zero price, average price, or last sale price, or standard price that we have set in the item master. Otherwise, by default, it will be average price. So no need to make any changes here because, as I mentioned, it is not going to impact anything in your financial reports. So I'll press enter and accept it. So let me enter the opening balance. For example, 100 numbers into 100. I'll enter and accept it. So now let me just go to stock summary. I have only one item and this is of opening stock. So the same thing is captured as my closing stock value here. Right. So now let me start recording few transactions. So first I'll record a purchase. Guys, in case if there is any lag in viewing my screen, please let me know. Currently, I'm into my purchase screen. So here I'm selecting the average cost, right? So there was one more question raised. What will happen when you are having batches and godowns, right? So any costing method that you're using in product. So and whenever you are having the locations or godowns created and batches enabled for the particular stock item. So what Tally will do is we will be valuing the closing stock valuation at every batch level and at every godown level. Right, so it will not take the average. So at every godown level and at every batch level, the system will calculate the closing stock valuation. And in the stock summary, it will show the valuation consolidating from all the godowns and batches. Right, so in case if you are having 2 godowns and under every 2 godown, you have 5 batches each, which you have allocated. Right, so first system will calculate at batch level. And the consolidated of all the 5 batches will be allocated to one particular godown. The same thing will happen to the next godown. And considering both the godown values, the final value will be posted to the stock item. So this is what the behavior set. So the customers who are maintaining these godowns and batches, they have to be very cautious with the respect to the data entry. In case if they are making any mistake with respect to the batch or godown allocation, obviously their closing stock valuation will not be correct. So this is what we mostly get in the scenarios where the transactions are very high and we find that so many data entry errors are there. So as on date, when we keep evaluating every transaction, we'll come to know that there are a lot of mistakes done in the allocation. So in case if while deploying these methods, if your customers are going to use the godowns or batches or any one of these features, either godown or batch, you have to tell them that the allocation should be correct. Otherwise, the closing stock valuation will not be accurate. Okay, so currently in my scenario, I'm not currently creating the location. So first we'll go ahead without creating the location or batch, so that first you can understand the concept, and then we will deploy the advanced features. So I'm just purchasing at 120. Okay, so I'll press enter and accept it. So now when I go to stock summary, so what will happen if you press enter? So the opening balance was 100 at the rate of 100, right? So next purchase was 50 at the rate of 120. So whenever there is a new inward, what did I mention? The average rate per unit will be recalculated, right? So currently I have only purchases, right? So the total inward value divided by total inward quantity, that is nothing but 16,000 divided by 150. The average rate is 106.67. The same thing is being allocated to the closing stock quantity. That is how it calculates. And one more thing here, under the average cost method, most of us will think that the inward rate as on date will be equal to the closing stock rate. That is again not correct. In some of the scenarios only it will match only whenever you're having only purchases and sales kind of a transaction, only then it matches. But when you are having the variety of transactions, like it could be rejection in, or it could be material in, or stock general, then your total inward rate will not be always equal to your closing stock rate. Am I clear? Any doubts so far? Okay, so now let us record one sales transaction. So I'm just keep changing the dates because I should be able to show you the ending inventory calculation. So I'm just keeping the dates for each of the transaction. So next I'm recording a sales. So here I'm selecting the stock item, right? So for example, I'm selling 75 numbers at the rate of 150. I'll enter and accept it. So now you can see still it is showing the closing stock rate as 106.67. So now let us see what is the cost of goods sold for these 75 numbers. So cost of goods sold or consumption, you will be able to check in this stock voucher report only by pressing F7, right? So if you press F7 in the stock voucher report, for every transaction, that is every outward transaction, you will be able to see the additional columns here, consumption, which is nothing but your cost of goods sold, and the gross profit and the gross profit percentage. So now let us see how this consumption is calculated. So the quantity that I sold was 75 and my average rate was 106.67, right? So you can see here the value is 8,000.25. So since we are rounding off, it is showing as consumption as 8,000 here. Is it clear how this consumption is calculated? So consumption is calculated in average cost based on the average rate the system has calculated as on date, right? So average rate was 106.67. That gets multiplied with the stock that I have sold. And here you'll be getting the consumption. So now my closing stock, consumption is 8,000, right? And the value at which I have sold these 75 numbers is 11,250. So based on this, my gross profit here will be calculated. So this gross profit is not the gross profit which you will be getting in profit and loss account. This is a transaction level gross profit which we have given, and this will be based on the costing method the customer has applied or configured. So again, there are scenarios wherein customers, they will match this gross profit with the stock summary, with the profit and loss account. I hope now you guys are getting the clarity, right? So this will never match with the profit and loss account statement because This here it is showing only at this particular transaction level, applying the specific formula. But in the profit and loss account, there it will consider stock, direct expense, indirect expense, sales account. All those things will be considered to arrive at the gross profit. So both of this can always not match. So now we are having this ending inventory. So ending inventory is 75, right? So average rate as on date is 106.67. So the same rate is being applied here for closing stock quantity. So now let me record one more sales entry. For 10 numbers. So here I'm selling for 160. So selling rate will never be considered for your closing stock valuation. Only for based on purchases, your average rate will keep getting recalculated. Right. So now it is 10 numbers. So for 10 numbers into 106.67, it is showing the consumption accordingly. And this consumption will be deducted in the sale value to get this profit percentage. Okay, Kanchana has asked a question. In sales voucher, all tests is the same. So Kanchana, you're referring to the stock summary report, right? Sorry, stock query report. So here, if I press all tests, so are you referring to this closing stock value? Yes, this closing value will be captured from the stock summary report. And even this cost price. These two values will be filled from the stock summary report, Kanchana. So in this report, stock query report, you can also see the standard cost, right? So this standard cost simply captures the last purchase rate. So in case if I'm going to record one more purchase, right? So I'm just changing the date and this will be my recent purchase. So 100 numbers I'm buying at the rate of 130. Right? So as I mentioned that with every new invert, the average rate will be recalculated. Right? So now if I go to new transaction, for example, I'm going to sales. I'll select the item and I'll press Alt S. That is for stock query, right? So now you can see here the updated cost price and the closing stock value, it keeps updating. And also the standard cost will consider based on the last purchase that you have made. It is not based on the standard cost rate that you have set. So whenever there is no standard cost rates that has been set in the item master, it will always pick the last purchase cost of that particular item. So here I'm just making one more, some 25 number sales at the rate of 160. Let me accept, right? So now you can see the consumption is getting calculated based on the latest average rate, which is nothing but 160. So 25 into 160. Based on this, the consumption is calculated. So this consumption will get deducted in the existing closing stock value, which is nothing but 19,140. So based on this, you'll be getting your closing stock value. So as long as you have only purchase and sales, this invert rate will be matching with your closing stock rate. So when you have different kind of transactions like only journal for allocating the expenses, or there are stock journals for making the adjustments or rejection outs, right? Debit notes or credit notes. So based on this, the valuation will change. Now, for example, let me record a sales return entry. So what I will do, I'll be recording a credit note for sales return, right? Some 10 numbers have been returned, and this is from the recent sales, for example. So now what will happen? 10 numbers have been returned, right? And in average cost method, what will happen? Anyway, we are not linking, system will not be able to link from which particular sales this has been returned, right? So that we can exactly calculate the consumption based on the purchase rate. So here also what will happen, whatever is the average rate as on date, considering that only the consumption will show in negative. So since the goods are returned and it is a part of outward transaction, we still show credit note under the outwards only, but it will be showing in the negative, right? So it will show in negative so that it will be creating a positive on the quantity side. So before getting this sales return, the closing stock quantity was 140. And now with this sales return, we have got 10 numbers, which is nothing but our inward. So 150 will be shown here. Again, for this, as I mentioned, it will be considered at the average rate as on date. So even for this invert, by default, system will take the average rate, which is nothing but 116. And the same thing will be used for the closing stock inventory. So with these set of transactions, I would like to pause here and ask any questions so far. Is the calculation is clear to you guys with these simple transactions? So why I'm showing you at the transaction level is whenever any customer is reporting that my closing stock valuation is not correct. So it will help you to analyze the customer data. So for any customer data closing stock analysis, it takes time because we do not know in what fashion the customer has entered the transaction, what exactly is that entry is about, right? So having these knowledge of each and every transaction impact will help us to troubleshoot the data of the customer. Okay, so now we know when we record a credit note, what happens. So similarly, now let us record a debit note. Right. So while recording the debit note, since as I mentioned that every invert will be having an impact. So you have to ensure that while recording a debit note, as you know that for which purchases you are making this return, you need to ensure that you will enter the same rate. So otherwise, by default, it will capture the last purchase rate, right? So in case if you are returning for this particular purchase, so you need to ensure that you are entering as 120 only. So now in my scenario, considering the case that I'm returning the goods made from this purchase, I've entered the same thing here as 130, right? Because at whatever rate I've purchased, obviously I'll be returning back at the same rate. So since I'm returning these goods, still it is part of my purchases. So again, here we'll be showing under inverts only in the negative. And since the goods are already moved out from 150, 10 numbers have been moved out. So the quantity will get reduced. And since there is a new invert, what will happen? So since the cost was earlier added, so now I'm supposed to reduce the cost, right? So from the existing value, the cost will be reduced. And again, my average cost will get recalculated. So what was the total cost as of now? 10,000 plus 6,000 plus 13,000, right? So this was the cost, 29,000. So in this 29,000, since I have returned the goods, right, worth 1,300, my cost will reduce by 1,300. So this will be my total cost as on date. And what will be the quantity? So quantity is nothing but 100 plus 50 plus 100, 250. So in this 250 numbers, I'm returning 10. So my as on date quantity is 240 numbers. So 27,700 divided by 240. So my new average rate that I've arrived is 115.41. So the same average rate will be allocated for my ending inventory, that is closing inventory. Is it clear now? What will be the impact when you raise a credit note and debit note? Okay, let us move to the next scenario. So now what I will do is I'll record one journal voucher. And this is a very basic thing which most of the businesses will do. Whatever the additional cost is there, they would like to allocate to the item cost, right? So now what I will do, I'll just record a journal voucher as on 8th of April. So I'll debit the allocation expense ledger, which I've created under direct or indirect expenses. So here what I will do, I'll be enabling this option, right? Inventory values are affected so that I'll be able to allocate the item. So this cost I'm allocating to the average cost and the value is, for example, 1,000 rupees. So here I'll create it to my purchase account, for example. I'll enter and accept. Not so I allocated this expense value to my item cost. So this journal voucher will be having only the value, right? So when there is only value and no quantity, still the recalculation of average cost will happen. So since there is only inward, what will happen? Earlier it was 16,158.33 and now there is an addition of 1,000. So it doesn't mean that it will become 17,158, right? So there is no quantity. So again the recalculation will happen based on the quantity here. So before this journal voucher, what was my total cost? 27,700 plus now 1,000 is the value. So my total cost is 28,700 divided by 240 units as on date. So my average rate that will be recalculated is 119.58. So in this way, after adding this additional cost using journal voucher or payment voucher or any other voucher type, you will be able to get the revised average rate and the revised average rate gets allocated to the closing stock inventory. Right? So as I mentioned that whenever there is a new inward, it will keep adding. So, but in average cost, what will happen? Again, the average rate will get recalculated considering the total inward value divided by total inward quantity and new average rate will be assigned to the closing stock quantity. So similar behavior will happen when you are using payment voucher to allocate the expenses. So those things you can try it out on your system. So any doubts so far or any other voucher you want me to record and show you the impact? Now the concept is clear, right? So for what kind of transaction the recalculation of average rate happens and when it happens, how the formula will be applied and how the closing stock quantity will be showing the values. So if this concept is clear, then whatever the different type of transaction the customer is recording, you'll be able to understand the value and explain it to customer. Okay, next I would like to take up one more important transaction about the tracking numbers. So what will happen when the customer is using tracking number? So basically tracking number is nothing but it is used either in the delivery note or receipt note, right? So we'll record both these transactions and see what will be the impact. So whenever there is a tracking number, what will happen? Only the goods are received. That is what will be considered by the system. So actual value of that receipt note or delivery note, sorry, receipt note will not be impacted. So now let us see how that is being handled. Yes, Kanchana. So only the inverts will be affecting the recalculation of average rate because closing stock is completely on the inverts. Whatever is my procurement cost or whatever is my invert cost or purchase cost. So at whatever rate you make the sales, it is not going to be considered. That is only required for your profit calculation. Okay, before proceeding, yes, Sachin, please ask the question.
Right now, what I'm seeing, you passed one JB, and in that JB, you are allocating this expenses to the cost of the item which we have created average cost. So it
Yes.
is affecting the closing value of the stock item. So
Yeah.
sometimes what happen whenever we are importing any material, and the expenses additional cost comes later. So when we are
Okay.
booking the JV, then how we can allocate that this particular expense related to that particular purchase?
Okay, so expenses related to the particular purchase. To link the transaction to transaction, we have item cost tracking, which we
Okay.
have gone through in the previous sessions, right? But that particular cost, in case if you want to allocate for the closing stock valuation, what you can do is in those expense ledgers, like how I have done here, right? I have enabled this inventory values are affected. So you can enable that and you can allocate the specific items.
So
Or
this
what you can do is, yeah, tell me.
this expense it is allocated to the closing value of the item, not to
Yeah,
one
so this
particular
is
purchase.
considered for the closing stock valuation.
Yeah.
But what happens is if you enter this transaction, so basically here what has happened, this value is considered for this closing stock valuation. That is one impact. And when you go to profit and loss account, so here it will show separately as allocation of expenses.
Okay.
So if you do not want this to happen in the profit and loss account, so what you can do is you have this particular group or you have here the additional cost in purchase invoice. So this will be applicable only in the invoice. So you cannot record journal voucher or payment voucher to allocate. This option cannot be used. I'll just check it out if this works.
Can you please open that profit and loss account?
Yeah. So it is in the T format. Let me just change the view
No, fine. It is okay.
horizontal.
It is okay. No
It is
problem.
okay.
So
Okay.
it is not adding the value of closing the stock.
It will also add there because that is considered for the closing stock valuation, right? But what happens is it is considered only to arrive the revised average rate. It is not adding as it is, right? If it is
Okay.
adding as it is, then 16,158.33 would have become 17,158.33.
Right.
So it is considered only to calculate the revised rate, but not the adding as it is.
Okay. Okay. Fine.
So that is the reason what here it will happen is it will show here again 1,000.
Hmm.
So if you would have allocated as it is, which is possible only during the purchase, right? So we have this option of track additional cost. So if we enable that, what will happen? The completely cost will get allocated to that item. And again, here it will not show separately.
Okay. Fine.
So if that method you want, you have to do it only in the purchases. Or when you are getting the expenses later on, you have to go back and add it to the purchase entry as additional cost.
Okay. Fine. Got it.
But what happens is, for example, you are importing, right? Uh, During the import, whatever the value of goods is there, for that you have recorded the purchase.
Hmm.
And once you pay all the customs and all, right? So that payment entry, again, you can't show it as payment voucher if you are going back and altering that purchase entry.
Okay. Fine.
So if you do not want to show that payment voucher, it's okay for you. But whatever the cost is there, you want to allocate entirely to the item cost, you can go back and alter the purchase voucher. But that will make the businesses to lose the track of the checks or the payments which are made to the custom department. If they are
Okay.
using electronic methods, obviously they will not be able to have the track in the system.
Okay, fine. And
So when they
one more
want to
thing.
have track also, but they want to impact their closing stock also. So this is the closest method, the alternate we have. So I do not say this as a complete solution because we have not yet handled landing cost and all in TallyPrime fully. So this is
Okay.
one of the alternate what we suggest to customers.
Okay, okay. And previously, someone was asking the questions about this costing method, and he had given an example of mobile phone trading. So, actually, that mobile phone trading business, how it works, mostly they are receiving a back-to-back orders if it is a wholesale business. So, if let's say I am having a order from one customer, then I place a order
Okay.
from the supplier, and whatever stock I'll buy, fully I'll allocate to that particular customer. And mostly businesses are using batches and godowns in that, because here in the UAE what will happen, whenever they are importing mobile phones, they are keeping in the logistics, and from the logistic it has to be released to the mainland. Okay, so the logistic we are creating as a godown, and there
Okay.
are multiple colors we are getting for that similar phone. So I have done a practical scenario with my customer. Those colors I have created as a batch.
Okay, so
So
you
in
might
that,
have would have created as batches, but that may gradually lead another issue of performance because what happens is whenever you are loading a company, right, it revisits all the masters that we have created. So the
yeah,
more and more mobile phone models are going to be added in the inventory of this customer, it is going to have more batches. So there he may face the challenge. So
no,
today in
yeah,
3.0, we have this advanced report filter, right? See,
actually, yeah,
all those things they were configuring. I'm just sharing my experience. So all these days they
mhm,
were using these batches or godowns as alternate to that. Wherever the customer wants to configure these kind of attributes to the inventory, like it could be weight or different sizes or different colors. So these are the item attributes. So they were managing in this way so that they will be able to track it. But today in 3.0, what happens is since we have enhanced the report filter provision, even though they are giving those kind of information in the item description, still they will be able to filter it, right? For example, if they are mentioned in the description as silver gray phone, that is the color of the phone. So they have just mentioned under the description as silver gray phone. So they can filter it out today, which was not possible till 2.1.
fine, got it. But actually,
Yeah.
that problem for the loading a report and performance issue is not happening, because they are
Okay.
dealing in a limited models and with limited batches. Only
Yeah,
six
in
or
that
seven
scenario,
batches
it
are
will
there.
work out completely fine for them. That's
Okay,
what,
and
as I
I have
mentioned, if the
suggest them.
inventory is very huge, it becomes a problem.
Okay, so they have a back-to-back order, so I have suggest them to use the costing method FIFO Perpetual, and almost
Okay.
the costing is coming same. And if they are having some issues in the costing, then I am able to explain them also in detail. There is no problem. But when why the problem is coming, when they are going to compare the cost in sales voucher, sales register, and in a stock item report. So there the difference is coming, and they are trying to match their sales register profit with their actual P&L.
Yeah, that will not happen, as I mentioned earlier also. Because here
Yes.
in the profit and loss account, what will happen? As I mentioned, you have this opening stock. Will this be considered in sales register? No, right? And you have
Yes.
purchase accounts. Again, this will not be considered in your sales register, these vouchers. Or there could be some expense vouchers, which again, you have not allocated to the item cost. And you
Yeah.
have your office related expenses, which is nothing but your salary or whatever the office related expenses that you have incurred or sales
Okay.
commission. So all those things will not be part of your sales register. So
Yes, correct.
there in the sales register, whatever the profit or cost that we are showing, that is only the estimated cost.
Okay, okay, fine,
So
got it.
that we never recommend customer to compare with their P&L account, because as I mentioned, that is for the sale of a specific stock item. But here
Okay,
we are portraying the higher picture at the org level, organization level. So
okay,
this they
fine,
cannot be matching with that.
sure. Okay, thank you.
So only as I mentioned that if they are just having two voucher types, purchase, sales, only these two voucher types they are having, then in most of the scenarios they will be able to match.
Okay.
Okay, others, any other questions? Before going to the tracking numbers. So I'll just show here. So just to show you practically, I'm getting here net profit of 4291.67. Let me just go to sales register here. So here, if I press F7, the profit will be 4883.05, which is nothing but the estimated profit. And here we are giving the formula indication also, how this cost is calculated, because based on this cost only, you'll be getting the gross profit here, right? So cost is nothing but actual quantity. That is nothing but the quantity what I have sold in this particular sales voucher into closing rate as on date, right? So so when I sold this particular 75 number, whatever was the closing rate, that was around 116, right? So the same thing is being considered here, and it is showing as 8,000.25. So based on this, here the gross profit is reflecting. But however, in the F12, we do have other option also, show gross profit estimates. And below this, we have the option of show cost based on stock valuation. So I'll enter and accept it. So since, as I mentioned that in this particular example, it will match because I just have a few of the purchase and sales, only one advance entry that was related to my debit note, credit note, and journal voucher. So here you can see there will be some changes in the cost because it will try to capture the consumption for this entry from the stock voucher report if I enable the F12 option. So earlier it was 8,000.25. Now there in the report, it was showing 8,000. The same thing is captured here, right? So these differences you will get when you press F12 and enable this option. So it will try to match the consumption for this entry from the stock voucher report. So again, if you enable this option, you will not be able to get this particular profit available in your profit and loss account. So this is totally a different formula, and the sales register, whatever it is displaying, whether based on the formula that we have defined or based on the closing stock valuation method, this will not match. So even here also, the profit is showing as 3291.67. This will again not match with this particular value. Because see here in my example, this value I have just allocated for calculating the average rate. I have not completely allocated and added to the item cost, right? So there is a difference of 1,000 when I compare with stock summary profit, that is 3291 is reflected here, and here it is 4291.67. So this, I guess, the most of the customers were reaching out on this, and we had created the detailed article in Tally RP9. I guess that is not available in TallyPrime. So we are working on that so that we will be able to come up with a detailed help document or help video wherein we will be explaining why these values will not match with each other report. So during that time, obviously, it will be easier for you to share it with customers so that they can do the self-help. Okay, so before proceeding with the tracking numbers, any questions or any doubts? Can we proceed with the tracking number transactions? That is delivery note or receipt note. Okay, so now as on 9th of April, I'll be recording a receipt note. So I'll go to Alt A, other vouchers, show inactive. I'll enable receipt note. I'll mention the date as 9th. So here I'm giving this tracking number. So if you don't give this tracking number, what will happen? Whatever the value that you have mentioned in this tracking number, same thing will be considered for recalculating the average rate. So here also customers will make the mistake wherein after recording few transactions, they'll go and disable the voucher type, right? They will go and deactivate the voucher type because this scenario we are getting mostly when customers are migrating the data to 3.0 also. So their closing stock value will go mismatch. So that is also one of the checklists which you need to see. Whatever the vouchers that they have recorded, all those voucher types should be activated. They should not be deactivating it. So here I'm entering 100 at the rate of 130. Let it be same. I'll enter and accept it. Right. So now after recording this entry, what here it is showing, it is considering as on month end, though I'm recording this entry as on 9th of April. So here, since the actual invoice is still not yet recorded, and Tally will consider only based on the actual invoice that has been recorded for this transfer of the goods, right? So only when the actual invoice is recorded, whatever the rate that you have entered in the receipt note will be considered for recalculation of the average rate. So till then, what will happen? It will just allocate the quantity here. So now, since it has considered 100 numbers, now let us see how this average rate is calculated. So what is the total inward value? 10,000 plus 6,000, 16. 16 plus 13,000, it is 29,000, right? So in 29,000, again, there was a reduction of 1,300 because we made a sales return. So I'll consider here 29,000 minus 1,300. 27,700 plus 1,000 was considered to recalculate. So this will be the value 28,700 divided by, now the quantity is 250 minus 10, 240, 240 plus 100. Additionally, we have received. So it will be 340. So whatever the receipt note quantity that you are going to receive, that will be considering the average rate here. Just 1 minute. Let me just check it out. Okay, it was 140. I consider 240. Just 1 minute. So 28,700. Just 1 minute. Yes, it is calculating in a different way. Just 1 minute. Let me just check it out. Yeah. So I guess I calculated as 240. So that was not correct. So actually, inward quantity was 340. 100, 200, and 300 plus 350 minus 10. So 340 is the total inward quantity as on date, right? So considering that, we are getting the average rate over here. So though my closing stock value as on date here, it is showing as 240, but still there is a receipt note, right? So this receipt note will be considered for calculating the revised average rate. But however, you can see here, it is not impacting my closing stock quantity. So unless and until, as I mentioned, we are going to record the invoice, this will not be considered, but it keeps recalculating the average rate over here. So to recalculate this average rate, what system will do, whatever the quantity and value that we have entered in this receipt note will be considered. But when customer is viewing this particular value, it will be considered, but not the quantity. So now you can see, considering this receipt note value. Receipt note value was 13,000, right? And before this value, it was around 27,700. So considering the receipt note value, the total value is 41,700 divided by, considering the quantity, the closing stock value quantity is 340. So 41,700 divided by 340 quantity, it has calculated the average rate of 122.65. The same thing has been assigned to the closing stock quantity, but this is not including this receipt note quantity. So here the customer may say that even though I'm having a receipt note, the quantity is not get increased. So few customers have reached us saying that they require a closing stock valuation wherein the actual inventory movement can be considered, irrespective of whether invoice is recorded or not. So today we don't have that option. So unless and until the customers record the purchase invoice or sales invoice, the valuation will not consider the quantity. Sorry, last time I said vice versa. So actually quantity and value will be considered from receipt note or delivery note for the devised rate calculation, but it will not be impacting the actual quantity, what is displaying in this stock summary report. So again, that we need to provide a separate report for the users so that they can understand as on date, considering the actual inventory, how the system is calculating. So this particular view will create confusion sometime to users. So again, the explanation, only if there are few transactions, it will be easier to explain. If there are higher transactions, it becomes difficult for customer to explain. Especially in case of FIFO or LIFO, it will be difficult. But in case of average, since only one formula is being applied, we will be able to explain this concept to the customer. So now against this against this receipt note, now as on 10th of April, let me record a purchase entry. So now this is the actual invoice that I have recorded. So once the actual invoice is recorded, again, what will happen? It will be impacting over here, right? So now you can actually see that purchase value coming here. So with the tracking, after the invoice is being cleared, you'll be able to explain this to the customer. So sometimes what customers will do is they will record receipt note in existing month and they will be recording purchase in the next month. So when they view the report as on date, it will be clear. But when they are viewing month-wise report, again, they may get difference in closing stock value, which is getting forward to the next month. So again, in case wherever the tracking is there, that will be the default behavior, because in the existing month, it will calculate differently, and in the same value may not get captured as opening value in the next month. So in my data, it is matching. It may match because we are having very few purchase and sales transaction. When the transactions are very huge with the different nature of different voucher types, it may not still match. So as per accounting norms, we have even recently published the help article that whenever there is a tracking number, right? And since we have already received the goods, so once the goods are received, the ownership of the goods is also transferred. And if we know the value of that goods, we recommend customers to record the purchase entry as soon as they receive the receipt of the goods or as soon as they deliver the goods. So some customers also have the scenario wherein they will be entering the receipt note in one financial period, and in the next financial period, they will be recording the purchase. So again, there the report will not match for them. And again, in the profit and loss account of the next financial period, it will have a double effect. So all those issues will arise. So this is the best practice. Currently, we are recommending to most of the customers that do not have invoices available in 2 different months or 2 different financial periods. So whenever the receipt of the goods are made, if they know the value, they have to record the purchase invoice, and also this will help them to get the proper ITC, right? So that is the best recommendation that we are giving. So most of the customers have adopted that, so that when they split the data or when they export and import, they will not be getting that issues of tracking numbers. That is one of the major issue which I wanted to share with all of you. So this will be true with most of the customers wherever these receipt note and delivery notes are used. And even in case of order system, right? So some customers will be having that order system wherein purchase order is directly tracked in purchase invoice, or sales order is directly tracked in sales invoice. So even when they split, the orders will not get carried forward, though it is not having any impact on the closing stock valuation. But still, whenever they are having this order system or tracking mechanism, we recommend them to record or complete the transaction in the same month or in the same financial period, so that they will be able to finalize the audit with proper closing stock value, and the same thing they can carry forward to the next financial period. Am I clear with this scenario of tracking numbers and what best suggestion we can give it to the customers? Can we record one more receipt note in case if this is not clear, because sometimes it will be complicated to understand this. So I'm just recording one more receipt note. It's on 11th of April. So value of this receipt note is 150, and I'm adding 100 quantity. So once I add 100 quantity, as I mentioned, that quantity will get added. And based on this value, again, the recalculation of average rate will happen. So you can see the difference of rate before this receipt note and after this receipt note. Right, so total value considering this receipt note is 56,700. So here anyway, it will be reflecting. So no need to enter here and check the values. So it will be directly reflecting here, right? So considering this receipt note value 56,700 divided by considering this receipt note quantity, the total quantity as on date is 440, which is nothing but 250 from here, 240 and 200. So 440. So 56,700 divided by 440. Considering this receipt note, it will be applying the revised average rate for the ending inventory. So in the average cost method, it will be easier. But when it comes to FIFO, it will be different, because in FIFO, what happens, the inward quantity has arrived, right? So the rate will be picked only when there is a purchase recorded. So in case of FIFO, what happens? Exact value from the receipt note will not be picked. It will be averaging the rate there. So though it is FIFO, since it doesn't have any invoice rate recorded, it will be considering the average rate. So FIFO has a different behavior when it comes to receipt note. And when it comes to average rate, since we are receiving the goods and we are calculating the average rate as on date, we are considering the value of this receipt note as well. But there are scenarios that when you make a purchase, in case if there is a change in rates, right? So based on that invoice only, again, it will consider. For example, in this receipt note, I have entered at the rate of 150, right? So now let me record a purchase entry. Tracking the same. And say, suppose that now they would have bargained at, for example, 145. Right? So now you can see based on this actual invoice rate only, it will be again recalculating the average rate. So from the receipt note, it will not be considered now. Only from based on the purchase invoice, whatever is the actual rate, that will be considered for recalculating the average rate here. So again, if customer has made such kind of mistakes, in case if it is genuine, then it is fine. So in case if they have changed the rates unknowingly or because of the data errors, again, this will create a mismatch in the closing stock value. Because in international, mostly we have seen even the customers who have paisa difference also, it will be a concern for them. because they have to make the payment of taxes also, right? Based on the closing stock inventory value. So that also applies to them when they are making the payment of this company tax. So the concern may be raised. So even when you receive such kind of data issues, you have to see that in case if there are any receipt notes and whether the same rate is being tracked in the purchases or sales invoice, because that also makes a difference in calculating the closing stock rate. So is the receipt note concept is clear? So receipt note in average cost is nothing but whether you record a purchase invoice or not record the purchase invoice. Based on the value and based on the quantity, average rate will be recalculated. But in FIFO, that will be different. So when we are discussing about FIFO in detail, we'll take up this scenario and we'll see how that will. I hope as of now, the average cost method is clear. So now let me go to the delivery note. So I'm recording the delivery note. So here also, obviously, you'll be having the tracking number, right? So I'm having the tracking number for 100 numbers. So I'm selling at 200 now. I'll enter and accept it. So here you can see, here also it will show a sales bill pending. And since we have already delivered, obviously we will be bringing that under outward. So since there is not at any actual invoice recorded, right? So since there is no actual invoice recorded, we are not capturing the rate over here. So even if you press F7 for sales bill pending, it will not show any consumption. So since the consumption is not getting calculated for the goods that I have already transferred to my customer, here there will not be any changes in the closing stock average rate. So whatever the existing average rate as on date before making this delivery note, same thing will get applied to my closing stock inventory for the remaining quantity. So once I record a sales invoice, then only my consumption will get calculated, and based on the consumption, my closing stock value will be captured. Okay, is it clear? So cost of goods sold or consumption, we will be calculating only when there is an actual sales invoice. So now let me convert this into a sales invoice. So on 16th April. Right, so once I record the sales invoice, there will be actual document. So now based on this, the consumption will get calculated. So again, before I record the sales invoice, again, if there are any furthermore purchases record or invoice recorded, based on that, the closing stock rate will be considered. So we cannot say that whatever the closing stock rate was showing when I recorded the delivery note will be the same when I record the sales invoice. So that will not be the scenario in average cost method. So since average cost method will keep recalculating on every inward, obviously, as on date, whatever will be the average rate based on the same thing. Once I record the sales invoice, the average rate will be displayed for the closing stock quantity. So this is the behavior when you record the delivery note. Okay. So next entry, I'll be recording a stock journal. Stock journal, what I will do, I'll be now recording, thinking that there are some defective goods, which I'm just showing as consumption because I'll not be able to further use it. Those have become unusable stock. So some 10 quantity that I'll enter. So whenever you are recording stock journal, so what will happen? As on date, whatever is the closing stock rate for this particular average cost item, the same thing will be picked over here. So I'll enter and accept it. So since I've just consumed it, again, this entry will be reflecting under outward, right? And since it is having a outward and the rate information available, it will be still calculating the consumption, right? So here, while calculating the consumption, you may find the difference because this happens because of the decimal values. But however, your closing stock rate will be intact, right? So if any customer is saying that these are just my scrap goods, which I'm just recording in stock journal, but why this is calculating the cost of goods sold? So we need to explain them that any outward entry which has a positive rate in this report, it will show the cost of goods sold, right? So anyway, to the extent that we have shown as scrapped or goods or a wastage or as consumed, so to that extent, the closing stock quantity will get reduced, and whatever the average rate was there as on date, the same thing will be applied to the closing stock quantity whenever you are recording a stock journal for this scenario. And there could be scenario that the customer will be using stock journal for transferring the materials from one location to another location, right? And during that time, if you navigate to this report, you'll be getting the details both under inward and outward. So sometimes what customer will do is, as I mentioned that here when you are recording, what will happen here? It will pick the closing stock rate, right? So the same thing has to be selected under the destination side also when you are transferring the goods from one location to another. So if you are not doing that, what will happen? There will be difference in rate for inward location and for outward location. So because of this also, there will be mismatch in closing stock valuation. So sometimes the customer also will ask that I'm just transferring from one location to another. It's the same stock. Why you are considering for valuation? So as I mentioned that we are having that accurate calculation at each Godown level, right? So then only I'll be able to understand that in one location, what are the inwards and outwards, based on that, what is the value of my stock in that location. And similarly, if I'm having 5 different locations, and if I'm not doing this valuation at every Godown level and at just item level, it will not be accurate, right? So obviously, for this particular purpose, whenever they are doing the stock journal entry for transferring the materials from one Godown to another, we'll ask them to ensure that the rate is captured same in both the destination as well as in the consumption. That is one checklist. And if customer is saying that I want to exclude this voucher from closing stock valuation, this is what the explanation we need to give it to customers. So basically, today Tally is calculating accurately at every Godown level so that they will be able to know how much stock is available in one particular location and what is the value of that particular stock, right? So that is the accurate level that we have given. So if they want to exclude this voucher, currently in the product, we do not have any option. And even this cannot be achieved through any TDL or customization. So here again, you can see here there are decimal values, right? So the decimal differences are there because by default Tally here in the consumption or in the gross profit, we have considered up to 4 decimal values, right? So considering that 4 decimal values, it will round off the value here accordingly. So that is the reason when you compare with this consumption value with the outward value, there will be decimal differences and accordingly the gross profit will be shown. But we need to give that clear explanation to customer that though at the transaction level here it is showing, but this is not going to impact or create any wrong calculation in this closing stock average rate. Because as I mentioned, this is for outward. Outward value is anyway not going to be considered for the closing stock valuation. Okay, so one more information I would like to show here. So customer will navigate to the stock item voucher report, right? So what will happen is, as I mentioned, the consumption and gross profit will get calculated for every. So this consumption not with this particular total, which is available in this gross total column. Because here at every transaction we are calculating, and here in the gross total value, what system will do is it will calculate based on these closing stock, based on these total consolidated values. So for example, this is the consumption. So this will be shown based on this closing stock value minus my outward value. So considering this consumption will be displayed. So always this will not be equal to the summation of this consumption line items. or neither the gross profit, right? So since the consumption is calculating at the gross total value level, this will never be or cannot be equal always with this summation of these consumption line items. So that is another thing you need to understand, because sometimes customer will match these and they say that in the total, the values are reflecting wrong. So we need to explain about that.